it is now time for our keynote speaker, who, interestingly, follows directly on from the last point Nikhil was going to make, or was making, I should say. So joining us from the future and from the metaverse is the Chief Executive of Kiya.ai, Rajesh Mirjankar.
Good morning, everyone. Thank you, IBS, for this opportunity. And it's a pleasure to really be in front of, as Robin put it, people in person. I decided that I'll deliver this keynote address without a PowerPoint, because I think what's happened during COVID times is we've seen a lot of that on Teams and Zoom. What we've not seen is people in person, so I thought maybe the story that I want to narrate is best delivered in 3D. And of course, 3D is, again, very synonymous with what I'm going to speak about as part of my keynote, which is the metaverse, to realize things in 3 dimensions. But let me start the story with the Kiya.ai part. Why Kiya.ai? The important aspect of that was to look at reinventing what we were providing to banks. We're a company that has been in banking for, banking solutions rather, for 26 years and more. Operations in 56 countries, 560 clients plus, and gladly being on the IBS sales league in the leadership position in quite a few solutions. And this together brings the responsibility of innovating constantly. In that innovation, one of the key things we've looked at is what has driven innovation has typically been the technology that is in the hands of customers. It took a long time, for example, for someone to have calls being done from exchanges where at least I can say that I'm old enough to say that I have observed telephone calls being done by somebody putting in notes into the telephone exchange of a 3-digit number, and it would connect me to an international call or a local call. And then if I had a lightning call, it had to disconnect somebody else's ongoing call and then put minus the lightning call. And of course, we paid a fortune for that. And things have changed from then on to now everybody being connected to anyone just using the power of technology. But what change came up is the advent of these smartphones. The advent of smartphones brought across the aspect of apps and then messenger apps, etc., that then gave the ability to communicate in text, voice, and video as well. So when we look at that change that's happening, it is imperative that the next technology change that comes in devices is obviously going to drive the future of how finance is done as well, and not just communications in the future. So let me just bring the story together to say what Kiya.ai is serving. While we were Introsoft, we've delivered solutions to banks globally, and the need to reinvent it was the aspect that we realized that artificial intelligence needs to come in to harness the amount of rich data that is there in banks today. If you look at what has triggered India as one of the sandboxes for innovation, has been the fact that we today have a very robust payment ecosystem. A lot is said about the fact that we are having so many unicorns come in day by day in lending, in payments, etc. But if you look at the core to that is the strong ecosystem given by RBI and then, of course, especially NPCI, who've come out with innovations in such as UPI, etc., that have then driven the ability to deliver seamless transactions to customers and then that to derive into products such as lending. Now, one of the things we looked at in terms of the changes that have happened is that banks that sat across for decades and had their own data and their own customers are now today seeing new technology companies come in and say that they can suddenly become unicorns. If you look at the IPO figures of banks today, they are struggling to get to the unicorn numbers, at least quite a few of them, compared to what the institutions that have come recently have done. And if you see what demarcates them, the difference is technology. That there is some awesome technology that the startups have that is able to deliver seamless transactions and, for example, lending in a second, being able to conduct transactions much more seamlessly. And typically it is where the customers win. So the Kiya.ai story was all about saying, how do we make customers win with the solutions at the banks that we serve? So we looked at bringing in artificial intelligence to harness the pool of data that is there. And let me just tell you what is our concept of data analysis. It's the same difference between a two-dimensional report today that is in the so-called data warehouse and then brought up on the desktop. It is like looking for cinnamon as it is seen. So you pick up cinnamon and say, okay, I can see cinnamon here. So that cinnamon either is my opportunity or my risk, or it is what I wanted to see. But what you have as a need for taking decisions on the fly is to smell cinnamon and not look for physically how it looks. And that is what advanced data analytics will provide. Artificial intelligence increases the aspect of, I would say, some haptic sense in people to say that that data that is there residing in hard disks for a long time is able to come to life and then give out these senses and that sense of the smell of cinnamon, so to say. So that is one important aspect that drove our need to have innovation in Kiya.ai, where we said that we will build what we call as Bank Brain. And Bank Brain will collate data from multiple sources, create those inferences, these KPIs, the KRIs, and importantly then have the harnessing of those with artificial intelligence to provide better customer service and efficient operations for banks. As we moved on, we looked at re-architecting the core systems to a microservices architecture, because when you see the adoption of cloud, it is imminent. It has happened for email servers. It has happened very well for a lot of origination of customers. But you don't find banks who have moved their core systems onto the cloud as much. And that is something that is bound to happen. The reason being that the people who've been on the cloud are able to deliver services ubiquitously and seamlessly across faster. So this change will then invite the need for re-architecting core solutions. And I, for one, we have about 300 plus core banking sites, and by saying that, we've changed to Kiya.ai, I'm not expecting all 300 to migrate to that platform suddenly. Because I just saw that, I heard one of the banks that faced a few downtimes, one of the large private banks, and the head of the company said, in these 3 years, we probably missed the opportunity to revamp our core banking or take it to the level what is required for this huge payment tsunami that is in. And that sort of has got us thinking to say, this is going to happen. So there is going to be a change in core to be able to then compete with the likes of the startups that are able to drive decision-making faster. Then you have the ongoing regulatory change. And I have to just add a point of a sales pitch here to say, yes, we are on the top of the IBS Sales League for RegTech solutions. And there we've seen regulatory changes happening right from just mere SDN scan list of names to transaction scanning to peer analysis. And now, if you see the mandate of how it is changed from the aspect of what the regulation said as perception of the risk officer, it is now really the responsibility of the board of the bank to ensure that they're compliant. So risk management has now taken a much higher step in terms of its importance in the way financial institutions are governed. That is where, again, artificial intelligence is used a lot. And if you see the need now with the whole aspect of huge amount of digital transactions, the aspect of having a 4-eye view on transactions to say I will detect fraud is gone. I think gone are those days of having a 4-eye view on anything in the bank now. If somebody is looking at a screen in the bank and trying to find an opportunity or an issue, I think they are actually pretending to work. What actually happens is that information has to come out. You have to cull out information through analysis to be able to now take decisions. And there is no 4-eye view that can happen with a 2D screen. So that has been a major change in the way regulations are looked at, where we look at fraud management as an important pillar to the whole aspect of approaching growth and customer service. So again here, Kiya looked at saying, bring in artificial intelligence to drive that change. Now, when we get to the last aspect of customer services, this is where the real change came in. In India, we've had the whole advent of the need for innovation coming from where I would see it started with demonetization and really give the trigger for people to think that, we've got to have a digital payment system. And from then on, that stimulus has driven changes, and quite amazingly from NPCI, with UPI coming in, and Aadhaar as well as one of the pillars of, I would say, not just identification, but innovation in the country. That has changed the way today we have financial services in India. Whether it is customer onboarding, whether it is lending, whether it is the whole part of getting re-KYC done and being able to identify customers for direct benefits to be done. It's across the span that this change has happened. So to adopt this change in the way payments happened, either as direct benefits or otherwise, we looked at saying what has to change in the payment landscape. One of the important changes there was saying who talks to whom for a payment. So the time was you had a person talking to a person, you had a card talking to a machine, but again with the person involved because you had to enter the PIN, that changed to mobile. So you had the mobile talking to the person, and now you have the mobile talking to the machine, and very soon you'll have the machine talking to the machine, which if you see has already started with the huge growth in proximity transactions. The growth in proximity transactions is said to be that by 2023-24, you will have 1.3 billion people now using proximity transactions, which means the so-called QR codes and apps that we run for the way UPI is seen classically would also have to adopt. And that is where I think with NPCI launching UPI Lite and the ability to take UPI offline is an amazing achievement. It's a good innovation to then carry that forward. Now, coming to an important missing element within the whole banking revolution, so to say, has been the fact that there are trillions of dollars that have been gone from wallets to wallets in the whole age of cryptocurrency. And if all of you have noticed, that's an opportunity lost or missed by banks by not being able to be a part of that ecosystem. There are so many who have written obituaries for banks with a fintech coming in, with every revolution. And I can tell you for one that we have only got more business as a company from banks, and there are no obituaries on that front. But if ever there was an obituary to be written, I would say that if at all banks were devoid of economic activity, that is the time to start seeing them in the ICU and then eventually writing obituaries. So I think there is a need for the ecosystem, the banking ecosystem, but first before the banks, to start delving into the aspect of crypto and saying they become part of what is happening as a revolution. Because legal or not, there is appetite. And appetite then would become a need, and need would then become innovation. Innovation then would be adopted at the very top. And that is why I would say that we need to now look at that change, which is where I eventually come to my story of the metaverse. That when we look at omni-channel, we've seen that it's become a omni-channel definition of saying mobile and desktop. But eventually, if you see the increase of sales in VR headsets, AR headsets, MR headsets is increasing with the prices coming down. And increasingly, you will find people on games, and that experience, I can say, is a wow factor. The fact that, in COVID times, you have not paid people, that people have been attracted to the so-called avatars on the games to say, okay, we've got some life going here. That is going to then come into banking. And that somewhere links my two stories of metaverse and crypto. I think the initiative by the Indian government to look at CBDC as one of the fortes, as a fungible token, is quite timely to that effect. Because with CBDC coming in, I think India stands to be one of the first countries in the world having a great payment ecosystem, then bringing in CBDC to now drive that because adoption is faster. And why I say that is because the few countries that have launched CBDCs, I have been there in person, at least in this one trip that I did. I went to both the countries, the world's first country to launch a CBDC and then the one that we're mentioning now. Without taking names, I can say that both places the CBDC is sitting in the crypto wallets because nobody is using it. Why? It's because there is no payment ecosystem. So when we look at CBDC in India, I think the time has come for that adoption. The change of what will happen in omnichannel is the fact that an avatar, being an NFT now, will be certainly in demand to say get traded. Why will it happen? Look at the demand for emojis within the messaging apps, right? They've had to come with sort of 3D looking emojis. One small revolution of saying that I will have a simple NFT being issued to you on the messaging app to provide you your avatar, because I can tell you my emoji doesn't look anything like me. So when I'm just putting a smile or something like that, I can tell you, I'm just trying to render an emotion, but I'm not saying that I'm doing it. That thing is going to change with a NFT coming across as an avatar. That will then drive the change to say, where do you show this NFT? The metaverse is the obvious platform for the NFT to reside. Now you have a challenge that you have metaverses that are coming up in outside of India as large companies that are coming up with their own metaverse. I do see that as an opportunity for social interactions, but as a risk for doing financial services. And why do I say that? It's because we've seen with the recent geopolitical issues that certain payment providers were forced by their governments not to provide payment services. I can guarantee that all of us know that that is not likely to happen in India ever, because we now have the world's best payment system. So if some private player said we don't want to operate in India, that would only be an opportunity for India to scale up further. But that's not something that will happen if metaverse was to be then so-called outsourced as an experience to private players. And that's why Kiya.ai thought about coming up with Kiyaverse, where we said that a bank can have its own metaverse. Why? Is because the bank is an active community. The bank is also a marketplace. The bank can provide the NFT. The bank can also provide that experience. The bank already has assets. Those assets can become digital assets. So what more do you need as a business case to come up and say banks will need to adopt the metaverse at some point in time? So we are looking at a strategy in Kiya.ai of having a metaverse for banks where their customers can have their avatars. And where do these avatars come and play? India recently spoke about digital banking units. So we said that's the best opportunity. The digital banking unit creates the avatar. It transits into the mobile, into a WebGL interface. It transits into desktop as a WebGL interface like you play normal games. And eventually it seamlessly transits into the metaverse. Will metaverses interoperate? I definitely think so. Because if NFTs can be traded across as a common entity as non-fungible tokens with the backbone of crypto, I guess if NFTs were the avatar, then I'm sure the avatars can transcend across multiple metaverses for that purpose. And adopting a metaverse for a bank will provide the opportunity to not be away from the opportunity of where crypto is playing a big role in how transactions are conducted. You can hear today that people are buying virtual assets on some metaverses as buildings, as shops, etc. And some of you may be tempted to do so. I'm sure the Barbie doll revolution brought in the fact that you had accessories of small clothes being put onto the Barbies. So that whole life to now say that you can buy clothes for your avatar also is coming through. So for all of you who missed the Barbie doll revolution, at least a person like me, and that's my last opportunity to go in and say, okay, let me now put some clothes onto my avatar and feel that Barbie feeling, get the Barbie feeling. So that is something that metaverse provides, and I think the banks should not miss that opportunity. The fintechs should not miss that opportunity, because the Generation Z is going to go on to the VR headsets, the AR headsets, and want a 3D interface as an experience. Likewise, if I were to say, how are our interactions going to happen at the banks? I would think that, instead of saying that you stand in a queue, just imagine coming into the metaverse and becoming part of a room that is allocated for you. Meeting the avatar of your personal banker, who would then give the suggestions. Your documents are kept in a file as, again, free NFTs. Carry those with you, and you can say that these documents are now also possible to be given to somebody, like a deposit receipt. If I take that as an NFT and say, this is my deposit receipt, and I want a loan against it, who's going to challenge that if it came as an NFT from a bank? And I think those are the various opportunities as we'll delve into. The more you think about how metaverse can run banking and finance for the world, you will get as many use cases. And at Kiya.ai, what we've done is we've put up an experience center where we've said, come through an experience from being on a 2D mobile tile-based app to a hamburger menu on internet banking, to then transiting to WebGL, and then having the digital banking unit with the AI-based virtual humanoid, and eventually feeling your part or you being part of the humanoid inside the metaverse. And those are the interesting journeys that we are creating for banks and financial institutions. So thank you very much for your attention. And I think we should all look forward to have the next event possibly talking about the metaverse. Thank you.